Regulators rush to save the global banking system. Good news in the housing market, particularly if you're selling in Sydney. And Donald Trump says he expects to get arrested tomorrow. It's Monday, the 20th of March, 2023. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, massive show today. We've got a great interview coming up afterwards with Cameron McIntyre, the CEO of carsales.com.
Yes, we talked to Cameron about what's happening in the car market, but also what's happening with carsales.com. Of course, they have pushed into international markets big time recently. They took another 40% of the business that they own in Brazil. They now own 70% of that. We talked to him about that, about Korea, all sorts of things. Great interview.
Yeah, it's a cracker. It's coming up a little bit later on, but the main story this morning, Sean, is perhaps unsurprisingly all about the crisis in the global banking sectors. And we'll start in Europe, where Swiss officials are rushing to try and get a deal announced for UBS to take over its troubled rival Credit Suisse.
Yes, this is akin to, let's say, the Commonwealth Bank taking over National Australia Bank, but given there's really only two big banks in Switzerland, it's even more extreme. Now, UBS has put aside its initial opposition to any deal being pushed by the Swiss government and is exploring possible structures that could be executed quickly to halt a deep crisis of confidence globally, according to Bloomberg. UBS is asking the Swiss government for plenty of help on this one. They want them to take on certain legal costs and potential future losses, around $6 billion worth of help. In fact, Swiss authorities are hoping for an announcement imminently. It needs to happen, and we're talking hours or days, certainly not weeks. These two big global banks merging to save one of them.
And meanwhile, in the US, Sean, we've got legendary investor Warren Buffett has been in touch with senior officials in President Joe Biden's administration in recent days to help calm the regional banking crisis there.
Yes, there have been multiple conversations between Biden's team and Buffett in the past week, and the calls have centered around Buffett possibly investing in the US regional banking sector in some way. Many of those companies have been sold off very, very hard after the collapse of Silicon Valley Bank. Now, Buffett has a long history of stepping in to aid banks in crisis. JP Morgan won a capital injection from Buffett back in 2011 after its stock plunged amid losses tied to subprime mortgages. Buffett also threw a $5 billion lifeline to Goldman Sachs in 2008 amid the GFC. He knows this territory well, and obviously the US government is looking for help.
So with so much happening all around the world then, Sean, what's it mean for the local banks here and also for interest rates?
Well, big banks like the Commonwealth Bank, National Australia Bank, Westpac and ANZ have multiple relationships with global banks. The problem is when one bank goes bad, the Credit Suisse in this instance, it feeds through to other banks and their relationships with other banks and so on and so on. And the local players can get hit. That's not to mention the fact that Credit Suisse operates out of Australia as well, so has hundreds of staff here also. The linkages between banks is why global authorities are working so hard to save Credit Suisse and some of the regional US banks. It will certainly keep pressure on some of the local banks' share prices, including the regionals like Suncorp, Bendigo and Adelaide Bank and Bank of Queensland. In the very near term, it means the Federal Reserve will be under pressure this week to not lift interest rates. And if they don't lift interest rates, that will certainly feed through to Australian markets as well. Plenty going on, Michael.
All right. How did local markets finish last week?
Well, the S&P ASX 200 finished Friday up almost 0.5% to end a pretty rough week at 6,995 points. Now, for the week, the bourse was down 2%. Futures trading doesn't look promising. It's just another big fall today. Among the large caps on Friday, the banks were strong, led by National Australia Bank. Commonwealth Bank also did pretty well. The iron ore miners were mixed. Fortescue was up 2% and BHP and Rio Tinto were flat. Some of the energy groups did better on Friday, while the gold miners were the underperformers. Another to bounce was diversified miner South32. It was up nearly 3%, while WiseTech Global and QBE did pretty well.
And international markets?
Well, Wall Street fell sharply over the weekend, with both the broad-based S&P 500 and tech-heavy Nasdaq down around 1% on the back of this banking crisis. Interestingly, the Commonwealth Bank warned that a worsening of the global banking crisis could push the Aussie dollar under 60 US cents. That's because it just isn't a favourite of investors in troubled times. Now, it touched a low of 65.5 US cents last week. It pushed back above 67 US cents over the weekend. It starts this week just under that level. Cryptocurrencies rallied over the weekend, with Bitcoin's now fetching close to 26,000 US dollars a unit. And Michael, Brent crude prices remain around 75 US dollars a barrel. Still very high, but compared to what we've had in the last couple of years, pretty good.
Sean, got to say you're sounding a little bit husky this morning.
Wow.
Did you you had a wedding or something over the weekend?
I had a cracking wedding. A shout out to Liam and Alex. What a spectacularly good wedding they had on Friday night. And I had lots of family coming in from all around the country and the world. And yes, I had quite the weekend. And I'm struggling a little bit this morning, Michael.
What's it take to get you up on the dance floor at a wedding, Sean?
Well, on Saturday, not much. In fact, everyone at the wedding was on the dance floor. So I can't say I was alone. And the difference between a wedding today and a wedding when I got married is, of course, social media. So my kids and others thought it was really fun to share videos of me and people my age dancing on Saturday night. And to all those that did it, it isn't fun. It's not funny. Don't do it, please.
Sean, I've got a lodge of protest here. How are these videos circulating? And I have not seen them yet.
Yeah.
And none of them have made them yet onto the Fear and Greed Instagram account. That is my homework for today.
Yeah, you go and do that. Look, we had a fantastic weekend, a fantastic wedding. To the parents of Alex and Liam particularly, thank you, thank you, thank you.
All right, big weekend, big day today, big week. Sean will be back in a moment with the rest of the day's business news. Sean, there were more signs that the Sydney housing market has stabilised, with nearly 74% of homes taken to auction selling over the weekend.
Yes, now Sydney has been leading the rest of the country in the property market, firstly on the way down and maybe now in terms of stabilising. CoreLogic Research Director Tim Lawless said while it's too early to call a recovery, the persistently low level of stocks and rising demand may have started to tilt the market in favour of sellers again. Sydney's auction volumes jumped by 20% to almost 800 from a week ago, but they're still more than 20% down from a year earlier. Now, Melbourne's preliminary clearance rate over the weekend was also up nearly 6 percentage points to 69%. Auction volumes nearly tripled to more than 1,000, but they were still substantially lower than the same time last year. Across the country, the clearance rates lifted by 3.4 percentage points to 68.4%. Brisbane came in at just under 56%, Adelaide was just over 63%, and Canberra was about 57.5%.
Sean, the federal government on Friday released a 5-yearly Productivity Commission review where it makes 71 recommendations, including pretty broad actually, across the tax system, energy policy, migration, education and workplace relations.
Yes, there's plenty in it, much of it which won't ever be acted on. Still, it's a good big picture look at what could be done. Bunch of key recommendations in it. I won't go through the 71, Michael, though everyone, it's worth a listen. A few of the big ones: scrapping investment visas and setting a wage threshold for employer-sponsored visas to increase with age. Introduce a pilot visa for human services occupations like aged and disability care workers. Increase the duration of temporary skilled migration to 6 years, subject to continuous employment. So plenty around immigration and skilled immigration. Another one was to make it easier and cheaper for business to meet cybersecurity obligations by bringing in a single cyber incident reporting interface. Increasing sharing of data collected by government-funded service producers, including healthcare. And finally, scrap emissions policies that don't complement the safeguard mechanism.
Sean, do you think it would be at all demoralising to be working for the Productivity Commission and putting together this massive 5-yearly report, knowing that very little of it is actually going to be acted upon?
I know what you're saying. I think it would. You don't like to say it because I'm sure there's so much great work in there that it is acted on some way or another. Am I just trying to be nice to them? Probably.
I just think it would be really frustrating. You'd just be going, this
totally
makes sense. This is a good idea. These are some things we need to be talking about. And you just go, I'm going to put it out there and they're going to ignore it again, but I'm going to do it anyway.
Remember last week, Ken Henry, who was the author of the Henry Report quite a few years back, which was, basically a blueprint for tax reform in Australia. I reckon 20 years on, he's just decided enough's enough, and he went for the Albanese government on it. Maybe it just takes 20 years to brewed away there or something or other.
So what you're saying is that the Productivity Commission needs a brawler to go out there and really just kind of get stuck in, just rip and tear and say, this is what you should be doing, you buffoons.
Yeah. You buffoons, go for it. Yeah.
Okay. Anyway, it's a very G-rated show today, Sean. Now, this is an interesting one. There's been a significant jump in old-fashioned, nearly said good old-fashioned, but it's just old-fashioned shoplifting, with major retailers working to catch thieves who range from children right through to kind of organised crime.
Yes, it's a problem at Myer, which is engaged undercover police in Melbourne. New South Wales Bureau of Crime Statistics and Research recently revealed that theft from stores had jumped 24% last year. Now, that's the fastest pace of growth in retail crime since records began back in 1995. Rival upmarket department store David Jones said it's seen an uptick in theft, but also in nasty behaviour towards floor staff, according to a report in the Financial Review. Woolworths Group's quoted as saying shoplifting has increased as well. There's been plenty of reasons for it. Cost of living pressures is obviously a big one, but there are other things too. So too mental health and psychological issues and drug and alcohol abuse.
Sean, Telstra is planning to speed up the overhaul of its operations and job cuts as it attempts to extract $500 million in costs as part of its T25 strategy.
The Financial Review is reporting that a confidential document obtained by the masthead says there'll be job losses from the retail network and widespread changes to the consulting arm, that's called Telstra Purple, also to network management and sales support teams. The consumer and small business segments, that's Telstra Enterprise and Products and Technology, will also be hit. Now, Telstra's share price has outperformed amid all the recent turmoil. Remember, it's a defensive stock. It's up almost 4% so far this year, closing Friday at $4.13.
How about this one? Productivity is a big challenge for Australia. It's been low for decades. Currently, it's running a little over 1% a year, which is the lowest in about 60 years. Now, a research piece from the Reserve Bank offers a reason why.
Yes, so it says industry-wide agreements, which could include the Albanese government's new multi-employer deals, coincide with slower productivity and wage growth. The research found that a slowdown in national productivity over recent decades could partly be explained by sectors, places like retail and hospitality, using industry-wide agreements such as awards to set pay. The paper found that such sectors had a weaker relationship between productivity and wages that appeared to slow growth by making it less likely that productive firms could attract staff through higher pay. This is an age-old debate. The problem with industry awards is that individual employers can't pay individuals more money for doing a good job.
Financial wellness in Australia has declined markedly over the last year, with a survey showing that 60% of Australians worry about meeting normal monthly expenses.
Yes, the 2023 Your Financial Wellness User Insights report analysed the financial health of 1,200 Australians. The average Your Financial Wellness Index score dropped from 6.4 out of 10 back in 2021 to 5.7. Now, the report finds 43% of respondents reported high or overwhelming financial stress compared to just 27% previously. And while 60% sometimes worry about meeting normal monthly expenses, about 1/3 of those surveyed say they can't afford to eat out or go to the movies. The findings, released to coincide with Global Money Week this week, highlight a lack of financial literacy among Australians, with only 1 in 5 able to correctly answer 3 basic financial literacy questions, which of course leads on to my question to you, Michael.
Oh dear.
How do you think you'd go in terms of financial literacy? 1 in 5 are able to correctly answer 3 basic. Maybe I'll try and find what those questions are.
Yeah, I was about to say, I would say, look, I think I'd be okay. And largely that's also because of our sister podcast, How Do They Afford That? Which is basically my own financial literacy education, where we kind of go through a lot of these subjects. So if I failed this financial literacy test, then that would be fairly embarrassing for me.
Yeah.
But I'm just very glad that you didn't have any questions there, because that really puts me on the spot. And it's the one thing I don't like, is when you ask me a question.
Right. I'm the same though. You often say, question without warning, and my little heart jumps. It's like, oh, ouch.
Now that I know that you dislike it so much, I will be tripling my efforts.
Excellent.
Just to keep you on your toes. Now, Sean, how about this? Millions of fish have washed up dead in southeastern New South Wales in what authorities and scientists say is caused by floods and hot weather.
The New South Wales Department of Primary Industry said the fish deaths coincided with a heat wave that put stress on a system that has experienced extreme conditions from wide-scale flooding. Now, the deaths were likely caused by low oxygen levels as floods receded, a situation made worse by fish needing more oxygen because of the warmer weather, according to the department. Mass kills have been reported in the Darling Backer River in recent weeks. Residents in the town of Menindee, southeast of Broken Hill in New South Wales, complained of a terrible smell from the dead fish. Now, fish kills occurred on the river at Menindee during severe drought conditions in late 2018 and 2019. It probably is nature, but it's dreadful to see.
In international news, Sean, former US President Donald Trump said he expects to be arrested Tuesday US time as part of the Manhattan District Attorney's investigation into hush money payments to an adult film star.
Yes, he certainly is back. And as a result, he urged his supporters to protest, which sounds something similar to his public statements ahead of the January 6, 2021 Capitol riots. Anyway, it's made a bunch of people very uneasy. There haven't exactly been riots as a result, but Republican Party leaders have rallied to Trump's side, saying his arrest would be an overreach. Elon Musk came out, and he has been a Trump supporter at times. He said if Trump's arrested, he'll win the 2024 election in a landslide. Polls show Trump as the clear frontrunner for the Republican nomination, likely in a rematch with Biden in less than 20 months' time. Clearly, Trump is gearing up for another run at presidency. Why do we know that? Because over the weekend, he returned to Facebook. And his first post simply said, "I'm back."
Goodness me, the theatre, the drama of it all, isn't it?
A journalist friend.
Yes, yeah, absolutely. And we do enjoy reporting on it here at Fear and Greed. Speaking of Fear and Greed, Sean, because obviously we like to speak about ourselves, a quick little shout out, because obviously we rely so much on word of mouth here. And a lot of our growth over the last couple of years has just been because listeners who enjoy the podcast tell other listeners. And I reckon we could have found one of our most enthusiastic advocates yet, a gentleman by the name of Ian Skelton, who's been listening to the podcast for a while and has been telling everyone about it. So thank you, Ian, for doing that.
Thank you, Ian. Keep it up.
Yeah, absolutely. Please keep it up. Now, up next is the Fear and Greed Daily interview. And as we mentioned earlier, Sean, you're speaking with Cameron McIntyre, the CEO of carsales.com.
Yeah, it's all about the car selling market in Australia, but even more in-depth discussion about what carsales.com, the company, is doing here and overseas, particularly in Brazil.
Yeah, it's a very big ASX-listed company. It's a really interesting interview. It's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. As well, Sean, an interesting chat today with our resident economist, Stephen Koukoulas, for Fear and Greed the week ahead.
Yes, Stephen's very into the global banking crisis at the moment. We talk about what the Fed's going to do this week. Very, very big week for interest rates, particularly in the US.
Yeah, there's plenty of good listening. Thank you very much, Sean.
Thank you, Michael.
It's Monday, the 20th of March, 2023. Make sure you're following the podcast and join us online on LinkedIn, on Instagram, on Twitter and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.